financial statements may come across as complex to a lot of people, it looks complicated, but a good way to think about is that financial statements are really just stories told in numbers. So if you could read words, if you can understand numbers, that means to say you can have a better glimpse of your financial life as well.
Hello, you're watching Teatime Tuesday. I'm Rashan Gidwani. How does one make sense of the financial aspects of investments? Investing confidently requires knowing what lies behind the numbers. Joining me to discuss this today is James Leong, Adjunct Professor for Finance and Accounting at the Faculty of Law at the National University of Singapore. Hi James, welcome to the show. How are you today?
I'm good, thanks Rosh. Wonderful, thanks for inviting me.
Yeah, absolutely. Let's dive right in. James, in today's fast-paced world, financial literacy is more important than ever. As an expert in finance and accounting, can you tell us your definition of financial literacy and why you believe it's critical for everyone to have some level of financial knowledge?
So financial literacy is really about understanding how finance works. Well, every day of our life, we are making financial decisions, whether we are aware of it or not. For example, how much money are you saving? How much money are you spending? Are you invest your money wisely to grow your wealth? How much loans are you taking on? For example, your mortgage, your car loans, and how much money are you charging to your credit card and not paying them, rolling over? So these are day-to-day financial decisions that we make. And financial literacy is really about having the knowledge to know about finance and numbers so that you can make better decisions as far as this important aspect of your life is concerned.
So for those who are new to finance, could you break down what a financial statement is and walk us through its key elements?
So financial statements may come across as complex to a lot of people, it looks complicated, but a good way to think about financial statements is that financial statements are really just stories told in numbers. So if you could read words, you could read wonderful storybooks like Harry Potter. If you can understand numbers, and that means to say you can have a better glimpse of your financial life as well. So let's cite an example. You have your assets, you have your liabilities. For example, assets will be simply what you own. It could be money that you have in a bank account, it could be your CPF savings, it could be investments or unit trusts or your property. You might have liabilities in the form of a mortgage or a car loan. So if you take all your assets and you less of all your liabilities, the result is simply called your net worth or your equity. So for example, if your assets is $3 million and your liabilities are $2 million, then your net worth becomes 3 minus 2 is 1 million. Yes. So that when you put it all together, accounting people simply call that a balance sheet. So a balance sheet is really a story of your assets, your liabilities, and your equity. And if you're able to track this on a annual basis, what it means here is that you can see that your net worth, which represents your personal wealth, grow on a year-by-year basis, which is great, isn't it so? And you know whether it's going in the right direction or wrong direction. So financial statement is one way of helping you to make sense of the numbers, right, on an individual basis. For a business, is the same thing as well. Business like Phillip Capital, you have assets too, you have liabilities, and you have equity or net worth, same thing. So your finance team will put together a balance sheet to track whether you are growing in terms of your value, your net worth as a business. So that's what the balance sheet tells you. Now, every business will also have earnings, or we call it income, and as well as expenses. So if you take your income, you less your expenses, the result is your profit. If you have more of income than expense, or it could be a loss if it's the other way around. So this is called an income statement, which is also telling you the story of your profit. And this is something that you certainly want to focus on and grow, or if you're investing in a business, you want to make sure that this business is profitable.
So balance sheet, income statement, that's pretty much it.
One more, cash flow statement.
Ah.
Yeah. So we know our bank account is extremely important, isn't it? So therefore, the cash flow statement tells you about, hey, where's money coming in, whether there's more money coming into your bank account or less money flowing out in your bank account. So that tells you about how healthy your cash balance is.
Thanks so much for simplifying that for me.
Yeah.
So how can someone without a finance background make sense of financial statements and use them to inform their decisions?
If you don't know finance, then essentially you're probably stabbing in the dark trying to figure out and make important decisions with your money, whether you to invest in a company or not. There are really two ways of starting, one of which is you either could read books or you could attend training courses. And if you are a beginner, then a very good way to start will be to look for books along the genre of finance for non-finance people. They're written for non-finance people, people with no prior background or learning in this area. Look for things that are done in, like written for laymen, easy to understand, a strip of all the jargon. So in fact, I'm writing a book on this topic and it's called Financial Storytelling.
Okay.
Once upon a balance sheet.
Brilliant.
Yeah. So take out all the jargon and try to explain things in simple, easy to understand terms so that finance becomes accessible to everyone, the man in the street, the woman in the street, to make better informed decisions. So the other way, apart from reading books, will be to attend courses of similar genre, finance for non-finance people type of courses. And currently, I'm having a project with NUS Business School. You're familiar with Skills Future funding, Skills Future credit? Yes. So this course is called Financial Analysis and Business Decision Making. So you could use your Skills Future fund to come and attend this course and have a very good heads up as far as numbers and financial concepts are concerned.
So how do financial statements factor into the investment process? And how can investors use them to make informed choices?
So just going back to the three key financial statements that every company will need to report with regards to the numbers, which is the balance sheet, the income statement, and the cash flow. So let's go through each one at a time. The balance sheet story revolves around three characters: the assets, the liabilities, and the equity of the company. Now, when you put it together, it tells you something very, very important, because if the company has lots of liabilities, and you know liabilities means you have to pay back your loans, and that from a risk. So the more liabilities you have, the greater risk that you are taking with your business. So in other words, when we look at the balance sheet, we're going to use it to tell us how risky this company is from a balance sheet perspective. If it has low liabilities, which means low risk, then we say this company has got a strong balance sheet. So it's something that you could sleep better at night because the risk of it going bankrupt is quite low. So in other words, to summarize, what the balance sheet does is that it tells you the story of strength, the financial strength of the company. So very, very important. So you want to be investing in strong companies, not financially weak company that may go bankrupt. So the second statement, and that is we call the income statement.
Correct.
So the income statement tells you about the profit story, which is, are you having more sales and revenue compared to your expenses and your cost? So if you are earning more than you're spending, then the result is what we call a profit. And a profit tells you the story of performance. Because if you're profitable, consistently profitable, growing in terms of profitability, then we say this is a good performing company. And that's what everyone wants to be investing in companies like this. Or the opposite could be true. You could be spending more money than you are earning. So the result will then be that you make a loss. And we say this company is not performing, it's a poor performing company, and you want to be avoiding companies that are like this. And the third statement, that's called the cash flow statement. So the cash flow statement tells you about the health of the company cash flow and its bank account. So if you have more money coming into a bank account, then money flowing out, and if the money coming in is from a source that is what's called recurring, that means to say every day people are paying you money to buy your products, like Starbucks, for example, McDonald's, for example, then you know that your bank account is going to be very healthy. And again, these are good businesses to be investing in. So three things: you look at the balance sheet story, the income statement, which is the profit story, and the cash flow story.
James, is there anything else you'd like to share about finance or investing that we haven't covered yet?
I would say the important thing here is to focus on the story. As I've said, financial statements are really the stories told in numbers. So on an individual basis, look at your financial story. What is the story telling you based on the numbers that you have? Look at your assets, look at your liabilities, look at your net worth. Is it going the right direction? If it is, then it is a good story. If it is not, maybe it's a not so pleasant story. If it's not so pleasant, then what could you do to impact the story, turn the story around? For example, you might start looking at how much you're spending. Could it be that you need to cut down on your spending? Could it be that you need to improve on your savings? Could it be that you need to allocate more of your savings into wise investments that can grow your wealth and beat inflation? So the numbers constantly tell you whether your story is heading in the right direction. So I think from an individual perspective, that's what you could do with the stories that your numbers are telling you. If you are an investor, then definitely financial statements tell you the stories about a business. And what would be a good story? A good story would be a story where sales are growing, where profits are growing, where cash flow is growing in spite of inflation, in spite of rising interest rates. So then you know these are good companies that you want to be having in your portfolio. What will be sad stories? Companies that has declining sales, profit and cash flow, especially if it goes on for the last 3 years, 5 years. Eventually, there could be a huge bankruptcy risk. And we've seen many, many examples of this. So these are the companies that probably you need to weed them out if you have them in a portfolio, or filter them so that it doesn't come into your universe of investment possibilities. So do some portfolio rebalancing. I think that could be helpful during times like this. And I would say use the story as your compass to guide you through and navigate in these very uncertain times.
I had such a good time chatting with you today. Thank you so much for sharing your expertise with me. You made finance easy and simple, and I'm sure your insights are very valuable to our viewers as far as navigating the complex world of finance goes. I'd love to have you back on the program again. Thank you.
Thanks, Rosh. I really appreciate your time. Thank you.
James Leong shared some of his financial wisdom with me today. Stay tuned for our next episode, which will feature more insights and analysis. I'm Rashan Gidwani, and you've been watching Teatime Tuesday. Please like and subscribe for more. See you again.